Hello, welcome to today's webinar from Intellectual Property Insurance Services Corporation. We'll be talking about managing intellectual property risk and achieving peace of mind through the use of intellectual property insurance. My name is Chuck Baxter. I am General Counsel and a Senior Underwriter here at IPISC. We want to talk first, just give you a lay of the land, what we're talking about, and what kind of risks we're dealing with here. The numbers are scary. The average cost of patent infringement litigation is $2.8 million for each side, for the plaintiff or for the defendant, and that does not include damages that the defendant might have to pay. They generally take a year and a half as a short one. A 3-year period is not uncommon. And that's before you even start having to go through appeals or other processes. So there's a long disruption to the business if someone's involved in a case like that. Since 2010, we've seen 40% higher numbers of patent cases being filed, over 5,000 of them filed in 2014. And just in the recently completed second quarter of 2015, we saw a record number of patent infringement lawsuits. There has been some patent reform, there have been some changes to the system, but these things are not going away. They are a real threat to just about any kind of business. And one of the things you might not know is that other kinds of insurance usually do not cover this sort of risk, especially in the commercial general liability policy, advertising injury provision. Patent litigation is almost never covered. We talked about how much these things cost, and there are different kinds of suits we might be talking about. And as you might expect, if the amount in controversy is not very much, it doesn't cost as much, but the more that you are fighting over, the more resources people will expend in that fight. So we see if your patent litigation is going to be between $10 and $25 million in what you're fighting about, the amount in controversy, the average for that was $3.5 million, according to the American Intellectual Property Law Association. Trademark and copyright litigation are somewhat less expensive, but you're still talking about $660,000, $670,000 for each side if your amount in controversy is over $1 million, but less than $10 million. The more you're fighting about, the more it's going to cost you to get through it. They're not just expensive suits to be involved in. They happen more often than people think. This study looked at the federal court records for the number of patent lawsuits that were filed, which are those red bars, and the number of shareholder derivative actions or stockholder actions that were filed in the federal courts. And these derivative actions are the sorts of things that can often trigger a claim on a director's and officer's insurance policy. We see that there are a lot more patent suits being filed, but almost every corporation has some sort of D&O coverage that would cover them in the case of a stockholder lawsuit. So these things happen more often than you might think, but people have not traditionally had insurance for them on a regular basis. We are seeing that change, but this is looking back from 2005 to 2013. So step back a little bit. Let's see, what are we talking about when we talk about intellectual property? Patents protect inventions. It is a new and useful way, a non-obvious way of doing something. It can be a better mousetrap. It can be a physical object, but it can also be a process or a business method. Things that are intangible still can be claimed as inventions, and patents can be found for them. And so you do see the Amazon one-click patent for the method of buying something with one click online was one of the most famous of the business method and software types of patents. Patent law protects patents from someone else who makes, uses, sells, or offers for sale that product or imports it. And so just because you didn't make it, you just sell it, you still may be at risk for being accused of infringing on someone else's patent. Trademarks identify the source of goods or services. It can be a word, it can be a symbol, it can be the McDonald's golden arches or the Nike swoosh, it can be a color like pink for Owens Corning fiberglass insulation. Copyrights protect original works of authorship. Literary, music, art, software is a big part of copyright protection. And trade secrets protect confidential information that parties have commercial advantage by keeping that information secret. And that can include things like customer lists, formulas, the recipes, the secret herbs and spices for Kentucky Fried Chicken, or the formula for Coca-Cola are protected as trade secrets. But you don't have to have something that specific. It can just be, like I said, your customer list or your method of manufacturing. If you do things in a particular way and you take reasonable efforts to keep that secret, you can protect that under trade secret law from someone who improperly obtains that information. So who has risks in this whole scheme of intellectual property? If you hold intellectual property rights, you have a risk that someone might infringe upon them. If you have a patent, you know you have a patent, you went to the patent office, you spent the time and the money to apply for that and get one issued. If you have a name for your product, or a name for your services, or a name for your business, or you've got any sort of consistent way of communicating this is who we are, you may have trademark rights in those things. And how would you feel if someone opened a business across the street from you and called themselves nearly the same thing as you, and people started going in there instead of coming into your place of business? Trademark law would protect you there. So you probably have your own trademark rights. Copyrights, if you have created anything, if you've written anything, if you have any custom software, you have copyright rights in those things. Or trade secrets, as I mentioned. On the flip side, the defensive exposure applies to nearly every business in existence. Anyone who is making, using, or selling products or services, or even offering to sell, even if they don't sell any, has a risk of being accused of infringing on someone else's patent. We've got some examples there at the bottom. We'll talk a little bit more about them in a little while. But people who have had our kind of insurance have been able to sustain attacks from others because they had the insurance in place. Now, can your customers afford the risk of not being able to manage their way through a conflict like these? In worst case, it can be bet the company litigation. You can be forced to abandon your most valuable product or the name that you're known by in the marketplace. This can be really going straight to the bottom line of many businesses, especially small to mid-size or not very diversified companies. The more things that you have, the more spread out your risk does become. Someone may put you in terms where you have to settle the case because you just can't afford that $2.8 million that the average cost of getting through trial would be. If you did that, you might have to sign over part of your business to someone else. You may not be able to sell those products anymore. You may not be able to make your goals. You lose your market share. You may have to cut a deal that you don't like. And where you've been through, you've advanced the technology, then you may have to walk it back. And nobody wants to be there. I want to step back real quick. If somebody has any questions as we go along, we're happy to answer questions for you. Please type them into the questions box that is part of the screen there, and we will deal with that as we come along. So you've got risks. There's intellectual property rights and responsibilities, and there are risks out there of either someone infringing on your intellectual property or accusing you of infringing on theirs. Why would you look at IPISC to help you in managing those risks? Our business has invented this market segment. For 25 years, we have been offering intellectual property insurance products, and we invented the enforcement side of the insurance. We adapted it for defensive coverage. we have been here consistently maintaining a market for this type of coverage. People come to us because we know about IP risks and we know ways to manage them. We've been in this for a long time. We know a lot of the players. We have ways to help you get through this. We look at your intellectual property insurance needs, and we can help you in selecting what works best for you. We try to build value long time. We try to help our clients, help our insureds maintain their business and use the insurance to manage the risk from intellectual property. We know that this sort of policy can be complex. It can be different from other kinds of insurance that you might be used to. So we try to help make that simple for you. Like I said, we've been maintaining this for 25 years. We have many tens of millions, 20, 30 millions, more than that, of claims paid out as lawyer fees, paid out as expert fees, paid out as settlements and judgments. We have been here. We put out a lot of money to keep people in the game. We had a case just last year that went to the U.S. Supreme Court and came back with a unanimous decision for our insured. They could not have afforded to get there without our help. We were an integral part of that team in getting that case there and getting that result that was really good for the whole patent ecosystem. One of the things that when you have a claim with us, we help you manage that. We help you deal with your lawyer bills, and often we can help clients save money through our review of the bills in an amount that's more than the premium that they paid to have the coverage in the first place. So the way that this helps, what this does to help you out, it helps to take that risk and share it, transfer it to an insurance carrier so that you're not funding $1 all of 100% of the cost of getting through this litigation. You need to be able to respond quickly, and if the lawyers know that the insurance is there, you can move forward right away without having to wait or get loans or get extra financing or going into your company's savings. You can, when the insurance is there, we can help you get started quickly on any dispute that you might be involved in. This does help add value. If you have our insurance, you can put a seal on your website or on your product packaging that says that this product is insured through IPISC, or our intellectual property is insured through IPISC, to let people know that you don't just have a patent that is just a simple piece of paper. You have someone standing behind you to help you enforce that. The most valuable part about this is sometimes that you get to level the playing field. If there is a larger entity that you're in conflict with, if you have insurance, you can help. That helps put you on a more level playing field so you can get to a decision on the merits and not have the case resolved based upon who has deeper pockets. Having the insurance in place can help you stand up for your rights and making sure that you are getting a fair hearing on those. You don't have to just give up your market share, and we are there to stand beside you. So we've got two core products, or two primary products here at IPISC, are the enforcement insurance, and that is the one that we created, that we started the company on, and we'll talk a little bit more about that in just a little bit, but it is different from other kinds of insurance. Almost every other kind of insurance out there is designed to help you if you have to pay someone else, if you are being attacked, if you are the defendant being accused of doing something wrong. Here, this helps to fund the plaintiff who is asserting their rights and enforcing their rights. It's a very different sort of approach to insurance. The IP defense policy, on the other hand, is a lot like other kinds of defense policies that you might be familiar with, but it plugs the gap that almost all other kinds of insurance run away from and don't want to try to cover intellectual property risks for the most part. So it is there as a specialized product for a particular risk that just about everybody has it, that kind of risk, but almost every other kind of insurer wants to exclude it. We have some other products that are available here through IPISC besides those two core products. There's a multi-peril, which is what we call our first-party coverage. That responds if you have had an insured event and you have lost the lawsuit. There can be consequences for your business, and that's there as first-party coverage for things like repair, remediation, redesign, loss of advantage, or business interruption if you have lost a case. So there is some first-party coverage available through our multi-peril. We have an unauthorized disclosure of confidential information policy for the unintentionally exposure of a third party's entrusted confidential information. If they entrust you with their trade secrets or with their confidential information, and that gets out and you are accused of doing something wrong, that's what the unauthorized disclosure policy is there to help you with. There's a smaller version of our enforcement insurance. We call it Invent Pro. That's an abatement policy for small entities, startups, individuals, someone who has no more than 3 patents or trademarks that they are concerned about enforcing. It's basically a smaller size version of our abatement or our enforcement policy, and it's kind of a starter to get into enforcing your rights through insurance. We have a specialized troll defense policy, specifically looking for known patent assertion entities, also sometimes known as patent trolls, who are pursuing businesses for things that are outside their core activity. This is the scan to email patent for people whose business involved doing anything else. Wi-Fi routers have been subjects of suits. Even if it was just being used in a restaurant or a coffee shop, they would sue the coffee shop for using that technology. This is the sort of thing we have troll policies specifically for. We have a post-grant defense insurance that provides coverage for inventors by paying their costs of responding to actions, maintaining the validity of the patents in question. And that is an area where patent reform has kind of opened up the opportunity for people to bring patents back to the patent office to challenge them there as not being properly granted. We have a policy for patent owners that can help them during that time. And then we have an asset-backed intellectual property insurance to help you if you are offering your intellectual property as collateral for a loan. We can write a policy to the bank that helps guarantee the value of that asset that you are pledging as collateral for that loan. So, when you look at IPISC and how we offer these policies, here are some of the things that we do to help our insureds. Number one, we are set up so that the copay and the self-insured retention do not erode the limits. Sometimes in some insurance policies, if you have when you have a copay or if you have a deductible, that amount that you have to pay counts against the amount of insurance that you have available under your limits. Under our policies, that is not the case. If you have $3 million in limits, then the insurance carrier is standing there for $3 million in full. It just might kick in after you've paid your self-insured retention, but those limits are not eroded by the payment of the insured's portion of the responsibility there. The insured controls the lawsuit. We have seen some carriers who've gotten into this sort of business, and like I said, we've been doing this for 25 years. We've seen people come and go who've tried to offer this sort of coverage, but they've not maintained a market, and after a season or two and a couple of lawsuits, they've gone away. One of the things we've seen is sometimes they will say, well, you will do whatever we tell you to do. That's not the way we do it. You have control of your lawsuit. We have some guidelines. We have some things that you have to meet in order to be able to go forward. But you ultimately are in control. If there is a recovery, then the funds that are recovered are shared pro rata between the carrier and the insured according to how much money each one of them put out. We have seen some carriers come in and say, well, if you get anything, you have to pay us back first before you take anything. So who are we looking at? Who's a good target for this sort of coverage? Small, mid-sized, startups, those are all areas where having the coverage in place can really help level the playing field against a larger company. But we see large companies coming to us also who want to level out what their exposure might be for this sort of conflict. We hold the pen for $5 million, but because we've been doing this for 25 years, we know the players, and we can get more in limits if someone wants to have that. We know the people, we know where to go to get those things. We have available worldwide coverage. We can write just U.S. risks, or we can write risks throughout the world. One of the nice things about this is being able to get a policy that is locked in for 3 years. Generally, it is an annual policy, and if you can lock in 3 years of 3 separate stacks of limits, one for a stack of limits for each year that would just roll one into the next. That way you lock in the price, you lock in the availability. It does cost about 10% less than insuring over each year, even throwing out the possibility that there might have been a price increase because of carrier dictates or change in the risk or litigation history. You can lock that in for up to 3 years. If you need financing, we have financing available. And anyone who has our policy gets those litigation management services to help them navigate dealing with the attorney's offices, dealing with all of the difficult things, getting through an intellectual property dispute. So this is one, here's an example of litigation management. We talked a little bit about this company, Octane Fitness. Went all the way to the Supreme Court, got a unanimous decision from the Supreme Court. And in this Supreme Court, that's very unusual to see them be unanimous about anything. When we are helping them to manage those expenses, because the insured does have some degree of co-insurance, which can be 10 or 20% as you go forward, we can help them save. We've often seen that our litigation management services have saved them more than what they paid in premium to have the coverage available in the first place. It's important to get good lawyers to do this. We don't just want some storefront lawyer or back of the phone book lawyer who generally does slip and falls to litigate this sort of case. Our requirements are that the lawyer has to have litigated and tried this sort of case before. And we know plenty of good litigators who have done that. And we can help refer people to if they want to interview different attorneys in that case. So it's important that we're able to get a good lawyer, but get one that's efficient. And we can help in negotiating billing rates and drafting any client agreements that someone might have. Okay, additional, one of the questions that we've gotten in was asking about financing. And we do have, if you or your broker has financing that you use, you can use that. We also have a couple of finance companies we have worked with, and there is simply a deposit that you put down, and then you can spread out your payments over pretty much the whole policy period. So you can spread it out. They do collect some interest fee for that, but you can spread your cost out over time. One of the other things when we do our underwriting, we try to help you look at what is your risk. We try to help you identify who's out there and what are we dealing with. That's one of the things our underwriters are doing, and we're happy to talk with you and happy to communicate that with you. We are not your law firm. We can't give you, even though we are mostly patent attorneys or patent agents in our underwriting core, we can't give you legal advice, but we can give you insurability discussions of why we think something is insurable or is not insurable. So when we look at something, we try to give you an overview of the technological space where you are. So here's some examples of people who have had our coverage. Policy limits, generally $1 to $3 million for most of these. The types of businesses that they are in, and what we see is that this often does track what we see as the most litigated sorts of disputes. Business and consumer services. In industrial or construction, there's a lot of conflict over who has the exclusive rights to particular methods or designs. Computer hardware and software are very hot for patent disputes. Telecommunications, medical devices. There is really a lot of patent action in medical devices because they're relatively small, but they're so dependent on particular technology that they can charge a lot for them. They have good profit margins that they can get through. So what we see there is a variety of policy terms and a variety of limits. And if you look down the premiums, they can vary. We don't have just one place where we can go off the shelf and say, hey, everybody who wants this sort of insurance will have to pay X number of dollars, because there are a lot of circumstances that are into play there. And sometimes, especially on enforcement, we can have premiums that are just a few $1,000s if they're just looking for a very small amount of limits. And we can write as low as $250,000. But if we're writing a $5 million defense policy on someone with a lot of products, we get into six figures per year easily in premium. So there's a wide variety of costs there, and self-insured retentions. One of the things we are looking at there is the business rewards and the business risk that come from the type of business practices that you've decided to employ. And so self-insured retentions can be as low as 2% of the policy limits that are being offered. They can be higher. They can be, like, here's an example of a $300,000 self-insured retention on any claim for someone who is in the voice over IP, voice over internet technology services, because that is a very litigious area. It's a very expensive place to get lawyers and experts and discovery in. So there's a wide variety in costs. And one of the things we can do is, if you talk to us, we can get you an indication of what a first guess is that this would likely cost. So when we talk about who this really works for, like I said, for early startup, small, and even mid-sized companies, this is a great way to level the playing field with larger companies. It helps you to be able to get to a decision on the merits, to leverage your position and be able to sit down and say, hey, I'm not paying this out of my pocket. I have insurance. You better get serious about talking with me, because this is where we stand. You don't have to just fight, give up because you don't have as big of deep of pockets. Now, big companies, like I said, we do see them sometimes managing their intellectual property risks by saying in contracts or licenses or supplier agreements that the other party not only has to indemnify them for the cost of any intellectual property litigation, but also that they have to have insurance to cover that, because they may not be confident that they don't know your books, they don't know if you're really going to be there, and they want to see that there's a policy in place. And this can help you get through that sort of deal if you're dealing with a large company, or if you are a large company, you may want to require that. So I'm going to go into a little bit more depth about the core products, the primary products that we have to offer. The enforcement insurance, we sometimes call that abatement because you're looking to abate someone else's infringement of your IP rights. These are important assets. The name of your business is a trademark. That's very valuable to you. The patents on your product or your technology, you have those patents because doing that thing in that way gives you an advantage in the marketplace. Copyrights are also strategic assets to your company, and people don't usually budget out, hey, I'm probably going to have a lawsuit with somebody this year, I better set aside money for that. But you can budget for that in the way of having insurance in place for it. One of the top IP litigators that we work with likes to say, if you have a successful product, if you're making money, the question's not if you're going to have an IP dispute, the question is when. Because this intellectual property rights holders or intellectual property disputes follow the money in many cases. If you are making a successful product, even if you have a patent or a trademark or a copyright on it, if it's selling a lot, somebody else is going to want to sell a knockoff of that, and you may have to enforce what you have against them. On the flip side, if you start selling a lot of something that is not that is your own original product, someone whose market segment you are eroding may look for some sort of intellectual property rights to throw at you to try to create a conflict, to try to slow you down. This happens all the time, and if you can't afford to make that fight and to get to the proper decision, because it can take a lot of money, then you're going to have to knuckle under and do whatever they want you to, and that can put you in an unfavorable position going forward. So this enforcement policy, as I said, it covers the cost of enforcing, and because we've been in this business for so long, we understand some of the things that you have to do. If you are enforcing what you have and they assert back against you that they ask a court for a declaratory judgment that they are not infringing, the cost of responding to that is going to be included in your coverage. You don't have to just pile up your money and see who has the most money to begin with in order to figure out who wins the case. We see that sometimes you put a potential infringer on notice that not only do I have this patent or these other IP rights, but I have insurance to enforce them. They are much less likely to continue that infringement if they have the opportunity to do something different. They might look for an easier target. So here are some of the other conditions and benefits to the enforcement policy. There is something we call economic benefit payback, and this is something that we have seen in the few other people who've tried to jump into the enforcement side of IP insurance over the years. Everybody has had some method of this where the insurance company that pays a good chunk of the freight to get through the case gets back their money if you win. And that's really easy to do if you, say you spend $1 million and then they recover $10 million in a settlement or in a judgment. It's very easy to pay back that $1 million. But what if you spend that money and you don't get that much back? The carrier still is going to look to be paid back because you've made decisions, and here we go to the idea that as a plaintiff's policy, this has to be structured a little bit differently than the usual defendant's policy of insurance. You are in control. You are driving the bus. You are making decisions about whether to sue, who to sue, how long to pursue that. If there is not an opportunity for a financial reward at the end, it may not make business sense to maintain going forward with that dispute. And that's a decision that you, as the insured, get to make. But if you do keep going, You will have to make a payment back, but if you don't have enough cash from the resolution, our abatement policy will forgive the first $100,000 worth of that. And so, or up to $100,000 of it. So you can make that decision as you're going into a dispute, into a case. You get into your initial pleadings and discovery, and then that's usually your first chance to settle. And if somebody says, fine, I won't do it, I'm going to walk away, and you spent $50,000 on your lawyers at that time, you don't owe the carrier anything because of this economic benefit relief that we offer through our policies. We talked about the strategic benefit of having this in place. Just when somebody knows that you're carrying a big stick, they're less likely to mess with you. The big stick that you have here is your insurance policy that will pay for you to litigate what you need to litigate. We will send out what we call early intervention letters to someone you identify as potentially infringing. Let them know that you have these IP rights and that you have insurance to back it up. We find the majority of the time that's the end of the story. That's all it takes for them to back off and stop doing that thing. And if they don't back off, they might write back and say, no, I think I'm not infringing because of this reason or that reason. You've just gotten free discovery about what their defense is going to be if you do sue them. As with other kinds of insurance, pre-existing things are not covered. If your house is on fire, you can't get fire insurance on the house. If someone is infringing on your patent right now, you can't get insurance to sue the people who are already infringing on your patent. It has to be for something that hasn't happened yet. And a condition is that you have to be able to get a third party, an attorney who's not interested in getting the litigation job, to be able to say more likely than not you should be able to win. This way the policy does not support frivolous litigation. It is only there if you've got a decent case and it's worth going forward in terms of just having been infringed. We had a small company, made a product, saw a knockoff artist basically make a copy of that product, called it by a very similar name, did a very similar infomercial for it, and when they sued them and they sat down to try to settle the case with the magistrate judge, they sat down not just with their lawyers, but with their insurance company to say, we're here to fund this to get to a decision on the merits. That case settled much more quickly once they found out, once the defendant found out that insurance was there. And the carrier just got back what they had put in, and the insured kept all the rest of the proceeds. So we're going to flip that around. We're going to look at defense insurance. That is more like the traditional kinds of insurance that you have, except that it is specifically for patent or trademark or copyright assertions against you. And like I said, all you have to do is sell, offer for sale, make, or even just use the patented technology. And you can be at risk of being accused of infringing on someone's patent. You do not have to own any patent to be accused of infringing on a patent. You just have to be, if you sell someone else's product that you just bought wholesale and you sell it retail, you are at risk of being sued for infringing on a patent that might arguably read on that product. So defense insurance, there is to pay your costs and potential damages or settlements. Patent trolls who might just try to shake you down for nuisance value might go away when they find out, no, you have the insurance to stand up and try to get to a decision on the merits. They may move on to the next easy target in that case. So you don't have to settle quickly just to get out of a case. You don't have to settle on unfavorable terms because you can get to the merits, and that's important. That's all you can really ask for. That's all that's really fair. Damages and settlements are generally included in the cost because we know patent litigation and how it's different from other kinds of litigation. We know that sometimes you have to go back to the patent office and try to invalidate or get re-examination or redefinition of what should be in that patent. That's all part of your defense, and we know that, and we include that in the cost explicitly in the policy of what you get under the defense policy. Now, a condition of this is that when we start out, we need to do diligence. We need to see if you're already infringing on someone. And we would do that by either you providing us with a freedom to operate opinion from counsel that's recent, or have us do a search. Like I said, we have patent attorneys and patent agents in our underwriting corps that can do that search. There is a fee for it, but it costs a lot less than going to outside counsel for a freedom to operate opinion. Like the abatement policy, like any other kind of insurance, there is a pre-existing exclusion. But here, on the defense side, the pre-existing exclusion is for anything that you have already been threatened on or have good reason to know that you're going to be sued on. So it's not, your activity is not what triggers that, it's the threat that comes along that would trigger potential pre-existing exclusion. As an extension of that, there is a 90-day waiting period. And you see that in health insurance, you see that in life insurance. It's a lot like the pre-existing exclusion, but you don't lose that 90 days of coverage. That 90 days of coverage just shifts to the end of the last coverage period you have with that carrier. So you are still getting 12 months of coverage for a 12-month premium. That 90 days just moves to the end of the last policy you have with that carrier. And once again, you do have to be able to get an opinion that more likely than not, 50.1% of the time, if everything's presented right, you should be able to win that case. Whether that's because the patent is invalid or you're not infringing it, for whatever reason. This way, the policy is not there for deliberate or blatant infringers. But there's a lot of gray area in a lot of these cases, and we have not seen our insureds have significant problems in getting that sort of opinion at the time of a claim. And if you have a concern about that, talk to us about that. We have an endorsement available where you can get relief from, if you can't get a claim authorization letter, you can get some money from the policy to settle out that case. But that's an endorsement we have to make an agreement on before you put the policy, before you get the policy. Here's the one I talked about, going to the Supreme Court, Octane Fitness. Last year it went to the Supreme Court. These people made elliptical exercise machines. They were sued by the much larger manufacturer of competing machines who didn't like the way that they were taking away market share. They dusted off an old patent and asserted it, and it really didn't apply to this machine. And the courts recognized that, but they kept pushing it. And so Octane said, we should get our fees. These people should not have been suing us and keep on appealing this and keeping this case going. At the time, there were rules about when prevailing parties could get fees, and it was different for plaintiffs than it was for defendants. Octane said that's not fair, and ultimately the Supreme Court agreed. And Octane has really been a game changer in the system of patent litigation to help make it more fair that if someone is frivolously suing you, that you can get your fees back from them. Just like if someone is deliberately infringing on your patent, you can get your fees from them for having to pursue them. But IPISC was there with Octane from the beginning to the Supreme Court, back down to the trial court, which is where it stands. We're still waiting on a decision of how much they're going to award in fees. If we look at other kinds of insurance policies, like I said, in the commercial general liability policy, there is usually an advertising injury provision, but that is narrowly written to cover only things that happen in advertising that might be trademark or copyright related. Very, very, very seldom are they patent related, because it has to go to what happens in the advertising only, not any accused infringement by the product or the services that you provide. No coverage at all for that sort of thing under, and even we see some CGLs are even writing out almost all of advertising injury provisions. Errors and omissions policies, sometimes there's a little bit on some of the older forms for trademark and copyright. It depends on what the error and omission is, but we see some of those. We see a lot of those having explicit exclusions of intellectual property disputes. Directors and officers, generally no IP coverage. Professional liability, if it's based on the professional advice that is a direct cause of the infringement allegations, there might be IP coverage, but there might not be. Media policies, generally from what we've seen, we're not seeing a lot of patent coverage in them, but it usually goes to things that occur in your media only, and again, not to products or services that are outside of your media communication about what your core business is. Cyber policies, again, we see a lot of variation in those, but they are less likely to cover the products and the services like media. They're more about what goes on in your cyber activity. Here's what Ed O'Connor, the Chief Financial Officer of Octane Fitness, said about us. They really appreciated how IPISC's litigation management team helped to get them through the case. We helped them find counsel that not only did a terrific job, but did it at reasonable rates so that they didn't burn through of their policy limits before the case was over. And as I said, this case has been going on for 7 or 8 years. It's not over yet. There's still lawyer bills being generated by this. We are still there looking at those bills, helping them to make sure that they are within the scope of what the pre-agreed type of representation would be. Very large companies often have an audit department internally that will look at legal bills and decide if they are really staying true to what they agreed in the first place. But most companies can't do that. IPISC's litigation management helps you to get the most value out of the legal services that you're getting by doing those reviews for you as part of litigation management services, and that's part of every coverage that we write here. No Sun recognized how important it was when they were negotiating to tell the other side, we have insurance. Things are different. You can't just run roughshod over us. The benefit of having a policy through IPISC is the peace of mind that we have, knowing that the competition cannot stop you with frivolous claims of infringement. We were thrilled with the legal team that handled our claim. So these are people who have been through processes, have been through disputes with us, and they recognize how much this has meant to them. Questions to ask. If you're an insurance broker, or if you are a risk manager for a company, do you have, each company needs to look at this. Do you have rights in patents? Well, you probably know it if you have patents, but do you have rights in trademarks? What if somebody used the name of your business as the name of their business, and they offered a product under the same name that you offer your product? Would that be a problem? Then you have intellectual property rights in trademarks. Are you making, using, selling, offering for sale, importing any goods or services? Well, then you have defense exposure from patents. Or if you have names on any of those things, you have defense trademark exposure. Have you been in an IP lawsuit? Do you know anybody who has been? You will find out that these are some of the most expensive kinds of suits that you can be in. And they can cost, like I said, $2.8 million was the average to get one of these cases through trial for each side. Is it an attractive area? Are you selling a lot? Are you making money? Well, then someone else might want to get into your area and either knock off your product or keep you out of their market by bringing litigation claims against you. Have you ever done an assessment to see what your IP risk is? So these are things to think about, and I do have a quick disclaimer here. This whole webinar was for information purposes. Do not run with scissors. Your mileage may vary. This is not a replacement for the policy, but if you want to see a policy, get in touch with us. There's my information. You can reach out through our website, and really there are a lot of resources at patentinsurance.com, a lot of industry examples of people who've had this coverage, have been through this sort of thing. There's a lot of frequently asked questions that are available on patentinsurance.com. So here's some of the questions we got today. Question about the 90-day waiting period for someone. And this is truly, this is a 90-day waiting period. If you are sued within the first 90 days of the policy being in place, you're not going to be covered for that claim. Even if you got a threat letter during that time, that will exclude a later lawsuit on the same subject of that. If you have products that you are developing, we do allow you to schedule those on your coverage before you put them on the shelf. So before you go to market with something, if you can show it to us ahead of time, we can schedule it 90 days before you're going to reveal it to the public, so that when the public finds out about it and your exposure really starts, it can be fully covered if you have that kind of lead time available. I understand, not every business does, but we have seen some people in the fashion business and some other places that have been able to do that with us before. The defense policy for a company, a small company, has, one of the things we take into consideration is how big is the insured, what is their exposure. Obviously, if they are a multi-billion dollar company, they're going to have a lot more exposure than someone who is a much smaller entity. Those are all things we take into consideration. On the enforcement side, if you just have one patent, there's going to be a lot lower premium especially for someone small than there is going to be for someone who has a whole portfolio of intellectual property that they want to have insured for potential enforcement. So these are all things that we do take into consideration. The question was, do people have to go through a broker or can they come direct? And we are open either way. People will sometimes come to us direct, sometimes through brokers. The cost is the same either way. So we will deal direct, or we will work through a broker. They are the same. For someone who is in another country, all of our prices that we quote are US dollars. And had a question about, when we schedule a patent for enforcement, when does that coverage really apply? And as soon as we schedule it, it is insured for infringement that begins after the insurance is put in place. There again, if your house is on fire, you can't get fire insurance. If your patent's already being infringed on, you can't get insurance to pursue that party who is already infringing on it, but you can pursue other parties on it. We can schedule a patent application as soon as it gets filed with the U.S. Patent Office or whatever patent office. That way, you lock in the coverage as of that date for the purposes of the pre-existing commercial activity that would later become infringing. You don't have a legal right to enforce that patent until it issues. But if you've put that in place early on, when you're just filing for it, on the day it issues, you can use the policy to go after someone who just started infringing during that 3-year time that took you to get that patent, or 1 year or 2 years or 3 years or 4 years, however long it takes. Because sometimes someone might see your product on the market and copy it, or the patent office generally publishes patent applications for the whole world to see them within a year and a half after you filed it, or even sooner. Maybe somebody sees that and they say, hey, that's a great idea, I'm going to make one of those too. Then you can sue them as soon as your patent issues. So these are good questions. I do appreciate them. If you have more, we will be following up with you after this webinar in the next couple days. We encourage you to talk to one of our account specialists. We have people here every weekday during business hours in Eastern Time. We're in Kentucky. That we have people on the phone all day, every day, talking to potential applicants, talking with brokers and agents, helping you. We recognize there's a lot to this. You don't have to be an expert on it. That's what we're here for. We are here to help you with that. So if we don't have any other further questions right now, I do appreciate your time, and we will be following up. Thanks a lot for being with us. We hope that this helped you understand this sort of product a little bit better. It's one of the things we see people talking a lot more about than we used to, and we do appreciate that. So you have a great day. Thank you.